Darling, you send me, I know you.
Alright, so we are here with Brent McGregor.
Yeah, hi everyone. I've taken on a new role this year as Exec Chair for the New Zealand business, having previously been the Managing Director. It's been a new change, new role, and really refreshing. During the past 12 months, there's been about $1 billion worth of assets sold to offshore buyers in New Zealand, and that's in the bracket above 5 million.
Yeah.
The predominant successful country, I guess, acquirer would be investors from perhaps Singapore. There's been investors from the US have acquired some assets as well as Australia and out of Europe. So it has been right across the board, and there's a much broader depth of global attention on the New Zealand commercial property space, not just from the traditional partners we see out of Singapore and Australia, but certainly much further afield now. It has been in the office sector, but not exclusively, and there's been some really large landmark deals. Central Park in the Southern Corridor has sold to an offshore investor. The asset at 205 Queen Street, CBRE Tower in Auckland, has transacted for around 174 million to a JV constituting two Singaporean groups. There's been a large-scale transaction in Wellington, the Majestic Centre, for 123 million to an investor where the capital came from South Africa. And in Christchurch, the largest transaction was that of the PwC Centre, which is a roughly $50 million office asset that sold last year to a private buyer from Asia. We measure the transaction volumes above 5 million, and a lot of that $1 billion was made up of the larger scale deals. It's just mathematics makes that work, but there was certainly still a number of sub $15 million deals selling to offshore groups, Chinese private buyers wanting to get some commercial property assets in New Zealand and so forth. Well, the submissions now have been heard, but you end up with a situation, I think, where a little bit of common sense will prevail and not the bill as written won't be enacted. And what I'm getting at in that is, say for example, the acquisition of residential land. That's really the focus.
Yeah. And
what constitutes residential land is perhaps broader than anticipated, and in effect what the bill has done, as well as stop individuals acquiring existing New Zealand residential property, if it was enacted as it's drafted now, you'd end up the situation where offshore developers are unable to buy without consent, were unable to buy to develop residential apartments. I don't think it will be in its final form. I don't think it'll come through with that intention, but that's certainly is the intention as written now. And just to put some context around that of how serious that would be for the Auckland market, there's around 8,000 apartments in the pipeline right now in Auckland. Around 2,100 of those are being developed by offshore developers, and that's excluding apartments that are being developed by New Zealand developers with offshore partial ownership, but still constituting foreign ownership for the purposes of the Overseas Investment Act. There's groups like even Fletcher's. Last month we sold the North City Shopping Centre in Porirua, and for a price of 100 million, and that was the vendor there was the Kiwi Property Group, and it sold to an Australian-based private investor who's got some intentions to chip away over time and throw some capital at the asset.
Awesome, Brent. Thanks so much for taking the time to speak with us today.
Yeah, thanks, Ellie, and it's been a pleasure.
I know you.